As of today, Saturday, the 22nd of August, 2026, one of the most important developments is that the State Bank of Vietnam, or SBV, kept its daily reference exchange rate unchanged at 25,600 Vietnamese dong per US dollar. That means there was no new adjustment to the official central reference rate compared with the 21st of August. Under Vietnam's current trading framework, the reference rate operates with a plus or minus 5% band, placing the theoretical ceiling for commercial bank transactions at 26,880 dong per dollar, and the floor at 24,320 dong. For Vietnamese dong followers, that is an important distinction. A stable reference rate does not mean the currency is completely frozen. Commercial banks can still adjust their buying and selling prices within the permitted trading range, and market conditions can change even when the central reference rate remains unchanged. In fact, reports from today's session indicate that opening hour buying and selling rates at major commercial banks were higher than during the 21st of August session. This is why it is important to separate the official reference rate from individual bank quotations. When people see a bank quote move by several dozen dong, that does not automatically mean Vietnam has announced a major currency policy change. The central bank's reference rate, the commercial bank market rate, and the broader international USD VND market are related, but they are not exactly the same thing. Looking at the recent sequence, the dong has been operating in an environment of significant exchange rate attention. On the 21st of August, the SBV reference rate increased by 10 dong, while previous sessions had also produced adjustments. The reference rate had risen by 16 dong on the 19th of August, and then declined by 8 dong on the 20th of August. Today's decision to leave it at 25,600 therefore represents a pause after several recent movements rather than evidence of a sudden new currency regime. Another important development is the behavior of the US dollar inside Vietnam's banking system. Recent reporting indicated that commercial bank dollar selling prices reached around 26,500 dong on the 20th of August, marking a record level for bank quotations at that time. That development naturally attracted attention because it shows how exchange rate pressure can appear in the commercial market even while the central reference mechanism continues to operate in a managed framework. However, today's information also provides a more balanced picture. Vietnamese financial reporting on the 22nd of August showed commercial bank dollar prices easing from earlier levels, with Vietcombank reported buying dollars around 25,890 to 25,900 dong, and selling around 26,300 dong. On the 21st of August, this suggests that exchange rate conditions are moving in both directions rather than following a simple one-way trend. For anyone following the Vietnamese dong because of future currency value expectations, this is where discipline becomes extremely important. A move in USD VND does not automatically translate into a sudden revaluation of the dong. Vietnam operates a managed exchange rate system, and policymakers have multiple objectives at the same time. They need to consider inflation, exports, imports, foreign investment, financial stability, domestic liquidity, and the competitiveness of Vietnamese businesses. The broader economic numbers are also worth watching. According to figures reported by Vietnam's banking sector publication, during the first 7 months of 2026, Vietnam's industrial production index increased by 11.4%. Registered foreign direct investment reached approximately 3806 billion US dollars, an increase of 58%, while realized FDI reached about 20 billion dollars, up 11.8%. Retail sales and consumer service revenue increased 13.1%, while total import and export turnover reached approximately 658 billion dollars, up 28.1%. Those numbers matter because a currency's long-term strength is connected to the health and productivity of the economy behind it. Vietnam continues to attract foreign investment and remains deeply integrated into global manufacturing and trade networks. Strong industrial production and investment can support economic activity, employment, tax revenues, and foreign currency earnings over time. But there is another side to the trade numbers that deserves attention. The same data show that Vietnam recorded a trade deficit of approximately $52 billion during the first 7 months of the year. That does not automatically represent an economic crisis. Vietnam imports significant quantities of machinery, equipment, intermediate goods, and production inputs, especially because its export-oriented manufacturing sector depends heavily on global supply chains. Still, the trade balance is something currency analysts should monitor because sustained import demand can influence foreign exchange requirements. Inflation is another major factor. The latest reported 7-month data showed average consumer price inflation at approximately 4.39%, while core inflation was around 4.19%. These figures indicate that price pressures remain an important consideration for policymakers. A central bank must therefore balance economic growth with maintaining price stability. If currency weakness begins contributing significantly to imported inflation, policymakers may have stronger reasons to manage exchange rate conditions carefully. At the same time, today's international environment may be providing some support for Asian currencies. Recent global market reporting indicates that the US dollar has been under pressure, with the dollar index declining during the week. A softer US dollar can create additional breathing room for some emerging market currencies, although the effect is never guaranteed and depends on local economic conditions as well as global capital flows. Gold is also receiving substantial attention. International gold prices closed the week above $4,600 per ounce, according to Vietnamese financial reporting. Strong gold prices can reflect investor demand for alternative stores of value and concerns about global fiscal or monetary conditions. For currency watchers, this is another reminder that the dong is operating within a much larger international financial environment. So what does today's Vietnamese dong news actually mean in the short term? The most reasonable interpretation is stability with continued market pressure. The official reference rate is unchanged at 25,600 dong per US dollar, while commercial bank rates remain elevated compared with earlier periods. That tells us the SBV is continuing to manage the exchange rate rather than allowing uncontrolled daily fluctuation. For dong followers, the key point is that today's data do not confirm a sudden overnight revaluation, a new fixed exchange rate, or any guaranteed dramatic appreciation. There is no credible evidence in today's verified reporting that supports claims of an immediate transformation of the Vietnamese dong's international value. The facts instead point toward a managed currency responding to domestic and global economic conditions. Looking further ahead, the long-term story is more interesting. Vietnam's industrial expansion, foreign investment, export capacity, infrastructure development, and integration into global manufacturing could continue supporting economic growth. If productivity rises, investment remains strong, inflation stays manageable, and the financial system remains stable, those factors can strengthen the foundations of the currency over time. But long-term currency performance will depend on policy decisions and economic fundamentals rather than speculation. The exchange rate could experience periods of depreciation, stability, or appreciation depending on inflation differences, interest rates, US dollar movements, capital flows, trade conditions, and central bank policy. This is also an important lesson for Iraqi Dinar followers. Whether we are discussing the Iraqi Dinar, Vietnamese dong, or another emerging market currency, the responsible way to analyze exchange rate developments is to focus on official central bank actions, economic data, banking conditions, foreign reserves, trade performance, inflation, and credible government policy. A currency story should never be based solely on social media claims about secret rates or guaranteed future prices. For today, the clearest verified takeaway is simple. The State Bank of Vietnam has set the 22nd of August reference rate at 25,600 dong per US dollar, unchanged from the previous day, while the permitted trading band remains at plus or minus 5%. At the same time, Vietnam's economy continues to show strong industrial and investment activity, although inflation and the trade balance remain areas worth monitoring. As we move into the next trading sessions, the most important indicators to watch will be whether the SBV adjusts the reference rate again, how commercial bank dollar prices respond, whether global dollar weakness continues, and whether Vietnam's economic growth remains strong enough to offset exchange rate and inflation pressures. Those developments will tell us much more than any unverified revaluation rumor. So, if you are following the Vietnamese dong, stay focused on facts, stay patient, and avoid making financial decisions based on promises of guaranteed currency gains. Exchange rates can change quickly, and even professional analysts cannot guarantee a specific future value. Thank you for watching Iraqi Dinar News. Make sure to subscribe to the channel, and like the video for responsible, factual, and regularly updated coverage of the Iraqi Dinar, Vietnamese Dong, and global currency markets. This content is provided for informational and educational purposes only and is not financial advice.